I want to quickly talk to you about how to pay less taxes as a single member LLC. So if you're listening to me right now, you have a single member LLC and you're trying to really figure out how to pay less taxes this year. So here's an overview I want you to pay attention to. So first of all, let's go back to the definition so we have a clear idea what we're talking about. Maybe you have a sole proprietorship and you're thinking that maybe it's the same thing as single member LLC. No. What is a single member LLC really? So a single member LLC is just as it sounds. It is a limited liability company with one owner, referred to as a member. So it's basically an alternative to being a sole proprietor, but with some notable differences. So one of the biggest benefits of operating as a single member LLC is that in most instances, it protects you from personal liability. This means that when forming an LLC, the company becomes its own legal entity, and your personal assets like your house and vehicle will not be at risk if your company faces lawsuits or bankruptcy. You never know, right? Now, the thing is that establishing a single member LLC does require some legwork though. So startup requirements vary from state to state, but this typically includes filing articles of organization. So this is part of a legal document used to establish an LLC at the state level, and paying legal fees and also filing fees, which range from $50 all the way to $800 depending on the state. $800, that's if you were in California. So basically when we talk about a single member LLC, you are talking about a state construct. So things happen at the state level. You do not have a single member LLC at the federal level. And what happens here is that once you have an LLC on an ongoing basis, once your business is registered and established, there may be annual fees from $0 to $800, as well as reporting requirements in your state. So it pays to really do some research when it comes to your single member LLC. So what is actually the difference between a single member LLC and a sole proprietorship, you might ask? Well, one of the main reasons a sole proprietorship, also sometimes referred to as a sole tradership, is amongst the easiest and most common business structures. And so this is because you don't have to take any formal action to become a sole proprietor, such as filing paperwork. No. For example, if you are a freelance writer, then presto, you are already a sole proprietor. However, unlike a single member LLC, as a sole proprietor, there is no legal separation between you and your business. That means you can be held personally liable for the debts and obligations of the business. To put it another way, being a sole proprietor does entitle you to all company profits, but you are also responsible for all the business's debts, losses and liabilities. So it's something to keep in mind as you determine the best path for your needs. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So when we talk about paying less taxes as a single member LLC, it's important to really keep in mind that there are some tax advantages of single member LLC, right? So basically, when we analyze things here, you need to understand that beyond limited personal liability, the flexibility in taxation is likely the second biggest benefits of forming an LLC, really. So typically, a single member LLC is taxed the same as a sole proprietorship, meaning that your LLC is considered an entity disregarded as separate from its owner and in the eyes of the IRS. So they use the term disregarded entity. So as a pass-through entity, any business tax obligations are passed on to your personal tax return through a Schedule C. So an LLC, however, can actually can elect to be taxed as a corporation, either as a C corporation or S corporation. So this option can reduce your self-employment tax burden because only the salary you pay yourself is subject to self-employment taxes. Okay, and so as a C corporation, profits are taxed at the corporate income tax rate, which could prove to be very beneficial to you. Now, there is, however, the risk of double taxation when your company is taxed on its profits and taxed again when dividends are paid to you or to you on your individual tax return. So it's one of those things where you have to think twice, okay? So when you choose to be taxed as an S corporation, however, you can avoid the downside of a double taxation, if you will. Income tax gets reported on your personal income tax return without being subject to corporate tax rates. So this is kind of cool. And one thing I want to say here also is that it's important to really understand that everything relates to how you see things. Okay, so sole proprietorship, you have one person ownership. Partnerships, you have a 2 or more people ownership. C corporation, you have 1 or more people. S corporation, you have 1 or more people, but no more than 100, and all must be U.S. citizens or legal residents. And for LLC, you have one or more people. For corporation, nonprofit, you have one or more people. So you can see that there is similarity between single member LLC and sole proprietorship. By the way, boss, I want to quickly remind you, today's topic, we are having a conversation about how to pay less taxes as a single member LLC. I want to talk to you about the benefit from tax deduction. So as you're trying to pay less taxes as a single member LLC, you need to understand that you may be able to deduct expenses that are not deductible for those filing as a C corporation. If you are filing as an S corporation or even as an LLC, you have big advantages here. So while occasionally overlooked, do not sleep on those potential savings, okay? So for instance, many single member LLC owners and sole proprietors work from home, so they have a home office. So they might not realize that they are able to deduct personal expenses like internet, phone, or even their vehicle. So basically, you have a few additional deductions. I was saying before, so you have internet, phone, and even your vehicle. So you can also think about licensing fees, for instance. So fees that are able to help you to conduct your business. Okay. So when we talk about benefits from S corp, we talk about LLC as a single member LLC, you have the ability to know exactly things like everything that revolves around your home office can be deducted. And one thing I want to say also is that it's important for you to have a great record keeping strategy, because if the IRS has to were to audit you, you want to make sure that you have all the paperwork, you have all the receipts, everything that shows that all the expenses are directly tied to your single member LLC. Because it's very easy if you do not have a segregation of let's say accounts. If you don't have a business, you got to have a business account for your single member LLC. By the way, you got to have a business account, a business bank account, and also a business credit card if needed. You want to really run your business as a business, okay? Even if you are a one-person business, you still need to show that you are running your business, as a legit business. This will help you a lot. So when we talk about paying less taxes as a single member LLC, we need to really understand that you need to know how to pay yourself as the owner of a single member LLC. Okay, as a single member LLC, you don't get paid a traditional salary. Instead, what happens here is that you withdraw money from your business account as needed, which is referred to as an owner's draw. Okay, so an owner's draw is money taken from the business equity accounts or profits for personal use or expenses. So as the owner, you can withdraw as much as 100% of the equity, but should keep in mind that doing so will leave your business with little to operate. So it's always a great idea to consider various factors when deciding the timing and amount of an owner's draw, including your business's cash flow. This is really important. Historically busy or slow seasons, and expected operating expenses as well, okay? And ultimately, the IRS advises paying yourself a reasonable salary, so they always talk about reasonable compensation. So they actually leave it up to you to determine what that amount is. So if your LLC is, if your single member LLC is taxed as a corporation, you will be considered an employee and you may have to pay yourself through payroll. This means you must follow the same tax rules as any other employer, including withholding payroll and income taxes from your pay and filing quarterly employer tax returns. So this is really important. Now let me give you a certain pro tip here. While the specific amount and timing of an owner's draw is up to you, there are some best practice steps to follow so that you have a paper trail. So draft a check on your business account that is made payable to yourself and you want to deposit the check into your personal bank account. You can also make a direct deposit from the business account to your personal account. So you have a clear idea, you can actually trace those payments, and you want to keep a record in your business accounts of this withdrawal, okay? Your paper trail can either be in the form of a check or records of an online transfer. And so when we talk about paying taxes on an owner's draw as a single member LLC, keep in mind that you will need to set aside enough money to pay your tax bill come tax season if you utilize an owner's draw. This is because when using the owner's draw form of payment, there is no tax withholding from your pay, but that money is still considered taxable income, and as such, you will be required to report it to the IRS and pay things like federal, state, and local taxes on the money. You just like any other form of earned income. So there's nothing different here, okay? So as a single member LLC, of course, you don't file separate IRS returns for your business, but rather you will report your business profits and losses on a Schedule C that's submitted as part of your personal income tax filing, okay? So this process requires paying taxes on all of your LLC profits, even if you did not draw those profits to pay yourself. So it's really important to think about that. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay less taxes as a single member LLC. Let's talk a little bit about advantages and disadvantages of a single member LLC, especially when it comes to taxes, okay? Now, it's important to understand that you have no personal liability. So when structured as a single member LLC, you are protected from personal liability in association with the business. So this can be important if you are operating in a high-risk business, okay? And you also have a personal asset protection. So in the event of bankruptcy, creditors cannot pursue your home or personal holdings. So this can be helpful if you have significant personal assets. You also have tax benefits. So because single member LLCs are considered disregarded entities by the IRS, there is no separation between the business and the owner for income tax purposes. In other words, business profits are passed through and reported on your personal income tax returns. You'll also be able to write off expenses associated with your business. And so those are the pros. Those are the main pros, the main advantages when you think about LLCs. What about the cons here? What about the disadvantages? Well, you have an increased setup cost. Remember, an LLC involves a bit more setup, including paperwork and cost. So this typically includes filing articles of organization. So your initial filing fees could be as high as $800, depending upon the states where you are actually setting foot in. Okay. You also have ongoing maintenance and filing requirements. So even after you have registered your business, you will still have filing requirements to meet and fees to pay. So depending on where your business is located, you may need to file an annual report or pay franchise taxes, okay? The state of California, for instance, charges an $800 annual franchise tax. So this is kind of important to know that the amount can go as high as possible. But the bottom line here is you want to really separate everything. You want to keep your LLC accounts separate from your personal accounts, okay? Very important. Let me give you a few pro tips here as we're trying to really understand how to pay less taxes as a single member LLC. It's important to really understand that when you think about single member LLC, you are actually you have hidden deductions for your single member LLCs. I've told you this before, so do not forget to deduct the home office. You got to deduct the home office, okay? And if you operate your business from home, of course, you can deduct $1,500. That's the maximum here, okay? And you can reimburse mileage. So for business use of your car, you can reimburse 54 to 57 cents per mile. That amount changes every single year. So, but you do have ways to pay less taxes as a single member LLC. You also can deduct monthly cell phone lines, okay, the bill rather. So if you use your cell phone for business, deduct the cost. You can deduct licensing fees and money paid to those helping you with shows and meetings. And I'm not even I don't want to forget about the fact that if you have an accountant, for instance, a lawyer, for instance, all those professionals can really you can really deduct their fees. Okay, so it's not just about marketing. You also have accounting. You also have bookkeeping, and you have all kinds of ancillary services that are actually provided to your business. So to kind of help you out in terms of filing your taxes, in terms of complying with all the different regulations that in industries where you operate. One thing I need to say here is that don't forget that if you have a single member LLC, you still need to file Form 1065 or Form 1120, depending upon the election that you have, or even Form 1120S. So if you actually elect to file taxes as an S corporation, you are filing Form 1120S. If you elect to file Form as a C corporation, you are filing Form 1120. If you're doing it if you actually want to file as a partnership, you will file Form Form 1065. But that's really important to understand that regardless of your single member LLC, you can still elect to file taxes as a different entity from your single member LLC. It depends on the kind of calculus you have, the kind of tax calculus you have, and also the kind of industry you're in. Now, if you want to maximize tax savings for your single member LLC, you really got to make sure that I've told you before about the home office deduction. That's true. You also have the mileage deduction. That's true. You have the cell phone, but don't forget the others. So you have the miscellaneous, the promotional events, the subscriptions, the licensing fees, the employee deductions. See, the thing is that simply because you're a single member LLC doesn't mean that you are not employing people. It just means that you own the company by yourself, but you can pay family or friends for assistance with business operations, and this costs are deductible, okay? And so when we talk about single member LLC, how those taxes work, you basically have to prepare a Schedule C. So all business income and deductible expenses are reported here every single year. So what happens here, after you prepare your Schedule C, you have to transfer income to Form 1040. So what happens here is that you have to prepare the Schedule C. This is pretty straightforward, and then the data on that Schedule C is actually transferred onto Form 1040, okay? And so the income on the Form 1040 tax return is subject to both your marginal income tax rate and self-employment taxes, which typically amount to around 15%. So this is really important. You also have, in some cases, you might have an LLC franchise tax, depending upon the states you're organized in. So most states like Delaware require LLCs to pay an annual fee to keep the company active. For example, Delaware LLCs are required to pay the Delaware annual franchise tax every single year, and a Delaware LLC needs to pay its annual franchise tax balance on time in order to keep its good standing status with the state of Delaware, okay? So think of a franchise tax like a maintenance fee to keep the company's legal protections. So this is what it is. And the Delaware annual franchise tax is a flat fee of $300. And so this is really what it's important to. So every state has a different sort of amount. You might need to do some research to see which one or which amount really applies to your specific situation. But if you are trying to pay less taxes as a single member LLC, the bottom line is you want to comply with all rules and regulations. You want to pay your taxes on time, and you also want to look for ways to actually write off as much as possible when filing your taxes. So this is really important. Thank you so much for your attention. I really appreciate it. Let's do a recap here. So in today's conversation, I spoke to you about how to pay less taxes as a single member LLC. So I gave you the overview, and then I give you the pro tips, and finally, I give you the bonus. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.